Welcome. It's March 14th, 2025. Welcome to the weekly swing low. We're going to go through our broader market tickers. The market is just about to close here on a Friday. We have our weekly candle closing, and this dashboard tells us look at these like that. This is your daily candle. So SPY, QQQ, Dow, even IWM, a green up candle. Up meaning it made a higher high. Another way of saying these are probably swing lows. We're going to look. We'll look at the different sectors. XLU swing low, inside day for real estate, inside for communications, up for materials, industrials. Oh, interesting. XLP finished down but green, so on pace for a bullish outside candle to complete on Monday. So let's look at the actual charts. That's what we're here for, right? So we're gonna go through our tickers. We'll start with SPY as we always do. So SPY is trying to. I mean, we're gonna close in like 10 minutes. It's gonna print a swing low, right? Like there's pretty much, unless something like crazy happens, it's gonna print a swing low by closing above 559 559.11. And so as long as we stay above that, that becomes a daily swing low, and that makes Thursday our low and potentially our daily cycle low. That was day 41. So right in the this is the timing band you would expect a daily cycle low. Now remember when we recorded this last week, we had this green candle in the works, and we talked about how we were setting up for a swing low. We needed the Monday candle to close above that high, all the way up at 577. We obviously didn't get that. We didn't got nowhere near that actually. Monday we just went kind of straight down, rebounded a little, and then we kind of chopped around here the lows, undercut these lows here yesterday, and now we're actually going to print a swing low. Now we're going to have to see if we get followed through Monday. I suspect we do because we probably have a daily cycle low. The catch is we are probably in weekly cycle decline. So this is only week 8 of a cycle that topped out on week 5. And so to really be in business, the next step we would need to see is a close above 569.54. That would give you a weekly swing low. So imagine something like this, right? Like imagine the candle closes next week like this. I doubt we get that, right? Because if I look on the daily chart where we would expect resistance, think about this. This candle here, right? Like I doubt we get even all the way back up to here, that 577 level, but more likely I would suspect we get resistance somewhere around here, right? Because this is where we couldn't get past as of Monday open, and then we kind of chopped around there. So I could see a world, and this is not a prediction, just something that we'd be watching for. We're expecting a lower high, so I could see a world where we do something like this, and then come like up here before we make another lower low to continue the weekly cycle decline. Again, it's only week 8, right? We generally don't get weekly cycles that are 8 weeks. Now, the thing to watch out for, we could see something crazy where maybe instead of this thing being a weekly cycle, we could see a world where this whole thing was a weekly cycle that was 31 weeks. All that to say, markets are unpredictable. And so you have to be prepared for that scenario as well. As I said, a close above 569.54 on the weekly, that would be your first sign, right? That, oh, wait a second. Now we're getting a weekly swing low, right? And that's an undercut of this low here, makes this kind of a false breakdown kind of situation. So you want to watch for that on the bullish side. But what I mean about that cycle, like imagine a world where this was actually just a little retrace within the weekly cycle, and this was actually your top, and then this was your low on week 30. It's entirely possible. Again, we need to see our weekly swing low as our first step. But thinking about the monthly chart, as long as we stay below 582.44, this is still a monthly swing high because we printed a high with this candle and the low of this candle is at 582.44 level. So we could rally all the way back up there and then find that be resistance on the upside and come down. So that means there's some upside to this rally. You just have to be careful. I would trail a stop if you're gonna try to play this rally. And in terms of downside, it's really simple, right? Like let's zoom in to like an hourly chart here. That might be helpful, right? So If you want to play really conservative, you don't want to lose this shelf here, right? Like just kind of visually, you kind of don't want to lose this shelf somewhere around here. So call it in the 559.5 area kind of thing, right? And certainly 556, essentially the lows of the day. But this would be your first warning sign if we lose this shelf here. So that's SPY. Let's move on to the other tickers. It's all the same kind of idea, all setting up for a potential daily cycle low here, or I should say a swing low, a daily swing low, first stop, and then what will probably become a daily cycle low. And so for Qs, that's a close above 466.43. And for Qs, I would expect resistance around 483. That's where you get, like, again, it's the same pattern, right? Like just different numbers. This is your Monday candle right here. This is the high from your Monday candle. So I would be first, a close above that level is your first bullish sign that, oh, maybe this cycle is going to have a few legs. This is only day one. So this thing could easily rally for 5, 6, 7, 8 days even. So you could even get a rally that lasts into the week after next, and have it still fail. For the Qs, the weekly level is 483.97. That would give you a weekly swing low. And the monthly swing high occurs below 496.93. So below 496.93, we are still a monthly swing high. We are still in a potential longer term cycle, topping pattern. And if we look at the ratio charts quickly here, QQQ versus SPY is starting to bounce. This is technically day 3 of a new daily cycle, but look at this candle. It's not looking so auspicious. Again, generally, the ratio of QQQ to SPY tends to rally when we're having a broader rally in the markets because the QQQs does better than SPY. For the Dow, let's look at the Dow chart. That daily swing low happens at 414.19. A weekly swing low would occur above 426.05. And for the Dow, we actually had our top back in January. So it did not make a new high in February like the rest of the market. And that swing high is active below 417.73. So actually pretty close to breaching that level from below. For IWM, daily swing low occurs if we can close above 202, which looks like we're going to do that. We would get our weekly swing low if we could close next week above 204.74. And you can see this consolidation box we've been in. We did poke below it, this lower wick. A lot of people got stopped out here. So that could give us some fuel. The next big move after that on the weekly would be 215. Call it 216. So quite a bit of acreage, right? Like between here and there, even if we're going to get a lower high, which is what I expect. That's IWM. And the ratio of IWM to SPY, that's bouncing similar to the Qs. So that actually has been bouncing since Tuesday, March 5th, but we're not covering a lot of ground in this new daily cycle. It is a green week, so showing a little bit of promise here. Let's move on to SMH. So SPY is on day 1 of a new daily cycle. SMH looks like it's actually on day 3. So SMH made its low back on Tuesday, and it's been rallying since. Your risk point, I would set your stop around 223 in that neighborhood. That's your low for today. And so to be clear, we already have our daily swing low for SMH. We've had it once it closed above 219.02. So this is leading the market. And we have a nice green week, whereas the other components are red. That's, again, also promising. You want to see next week we close above, call it 227, which is the high from this week. We have a nice green hammer. So this actually looks kind of, again, for a short-term relief rally. That said, long-term bottoms always start as relief rallies as well. So we want to watch both sides of it. And on the monthly, we talked about how SMH was a swing high going back to July, right? Just kind of quietly printed a high back in July of 2024. That is active below 227, right? And so we're like a hair below that. So it's going to be interesting. We kind of come back inside this consolidation box. You don't see You don't see like a 7, 8 month period that looks like this very often. I mean, look at these wicks. I mean, that's crazy. So that's SMH. Let's move to the ratio of SMH to SPY. As you would imagine, that's bouncing. So yeah, we're like, wow, we scraped along the floor here, and now we're bouncing nicely, making a nice higher high on the weekly. All very auspicious for semiconductors. What about Dixie? So Dixie looks like it's trying to bottom here. We talked about how we had this after this big long red candle. You're probably not expecting huge downside, at least temporarily. This is, to me, this looks like a rest, a consolidation before another leg lower. So this is week, yeah, so this was week 24. We did make a lower low. And so at this point, and we look at the 10-year yield chart, that's starting to show signs of a bottom. So I definitely wouldn't be chasing downside on this one. So, and in terms of bullishness, this thing would need to close next week above 104.09. That would give you a higher high on the weekly, but it really needs to get above the high from this candle, this big red bearish monster at 107.56, which is why this thing can rally all inside the range of this giant candle, and it's meaningless. It's just waiting for its next leg lower, which is what I would suspect is coming. And in terms of the daily cycle, it's a little murky. Like, did we just start a new daily cycle here and we're now on day 12 and it's bear flagging? In some ways, it doesn't really matter if this is all one long cycle or this is the start of a new feeble cycle. Bigger picture, we're in this like little bear flag kind of consolidation thing here. And so as long as we stay, you can kind of see the demarcation is a little clear here. As long as we stay below, call it 104.18, this is just kind of a bear flag developing along here, right? Grinding sideways. What about the 10-year yield? We talked about this. We actually have a little green week. It's actually our second green week in a row. So the 10-year is showing signs that last week was a weekly cycle low, potentially on week 24. It needs to close above 4.34, which it looks like it's not going to quite do yet. So we watch that level, 4.34. That gives us a weekly swing. And then we really need to get above here. Notice it's a very similar pattern to Dixie. We have a big red candle that we need to get back above the high of. So for Dixie, or excuse me, for the 10-year yield, that's 4.46 on the weekly chart. Let's move to oil. Not going to spend too much time here. We talked about how this thing was taking a trip to the lower end of the consolidation range. That's what it did. But look, now it's trying to rebound. It wicked. So this is not the time to go short. It needs to close next week above 67.91. That would give you a higher high on the weekly. Still needs to get back above this high here, which is at $70.56. Not a lot to see here. This thing is just kind of trading around in a range. What about TLT? Correlated with the 10-year yield, we know that's bottoming. So this thing should be rallying, right? When the 10-year yield actually, sorry, it's the opposite. Excuse me, because we were looking at a chart of the yield. As the yields go higher, this goes lower. And so the important thing here is we made a high here on week 7, but now we're just consolidating. This is all consolidation inside the range of this candle. So I call it a high of 92 and a low of 89. So about a $3 range. And so nothing to see here until we break out of that range right now. This has all the makings of this. This could be a bull flag, right? There's no edge here yet. You have to wait to see if your immediate low would be 89.38. That's the low of this weekly candle here. And on the daily chart, this looks like it could well be a nice bullish weekly cycle or daily cycle low, right? Like you had this move up, a little retracement, and then this high. And then, so on a daily level, if we can close Monday above $90.41, we'll have a higher high on the daily, and this potentially becomes a swing low once we cross back above $90.71. That's TLT. TBT is going to be doing the opposite. And so for TBT, we're in a range on the daily between 35 and 34, essentially, a $1 range. So which side of that is it going to break? It looks like it's leaning towards the downside. That's TBT. Now we'll do crypto, and then we'll do gold and silver. So crypto, so Bitcoin is bouncing here. We had this low here. We had talked about, is it going to be able to, like, this marked your potential daily cycle low, and then we have this kind of ugly move up. We've since undercut that low as of this Tuesday, right? So your new low here is at 76,500. It's very simple here. The structure is very simple. Has to stay above 80,500 thereabouts. And importantly, we're trying to build structure on the weekly where this could become a weekly cycle low, right? Like imagine this whole thing, it becomes one weekly cycle that's 31 weeks. A close next week above 85,318 would give you that higher high. And then we need to see a break above 94 to break below, above this candle. And then you probably have clear skies. That's probably your gateway to all-time highs. So 94,400. That's a long way up from here, but your first level to break above is that close above 85,300. That's Bitcoin. Ether's looking a lot weaker, but the levels for Ether it's a very similar pattern though. So on the daily, we've got to stay above 1922 to the downside, and we need a weekly close above 2152 to give us a weekly swing. That's Ether. Gold is doing really nicely. It's taking a breather today, but in terms of the weekly chart, we are on week 9, I believe it is. Let me just double check that. Yeah, we talked about this was a little bit of a stealthy weekly cycle low because you would think that this was it. But I mean, so far, we're like, this was a palate cleanser. We talked about how this, instead of being a weekly cycle top, could end up being the consolidation that we needed, and that's what's playing out here. On a daily chart, this would be our daily cycle low, which means we are on day 10. So still relatively early actually in the daily cycle. You really want to stay above the low of this candle, which is kind of ginormous. That's not as helpful in terms of actionability. Let's see on the 1 hour chart. So on the 1 hour chart, yeah, you want to stay above that cluster. So call it 2974 thereabouts. That's gold. What about silver? Silver, same count. Also, is it week 9 or is it week 10? Let's just see here. It is week 10, excuse me, not week 9, week 10. And for silver, you really want to stay, definitely need to stay above 32.94. But in the very short term, you want to give it an even shorter leash. Look at this structure here, right? Better still, if you don't have a position, you buy a break of this structure, right? Like this breakdown here, like that's a potential tactical entry, but it looks like it's about to backfire on you. Ideally, you buy a break of this structure and then a rebound, right? So around that 30, what is that? Like that 33.5 level would be a great entry if we get that. And finally, let's look at GDX and then natural gas. So GDX is looking nice. Let's see, what does that ratio chart look like? Yeah, so the ratio chart of GDX to GLD is doing really nice. So the miners are outperforming gold itself. That is a really good sign. Let's look at go back to the miners chart, the absolute chart. So we built a little wick on the daily. That's really helpful. I love wicks. That gives you great risk points. So the low of the day is 43.21. That could be your swing. That could be your stop, could live right around there if you're trying to play this upside. And very similar to gold and silver itself. This is day 10. This is your daily cycle decline. Now we're getting a nice move up. So gold is working. Tough bit though, if the stock market really crashes, that's probably going to pull precious metals down as well. But for now, you can play this rally. And finally, natural gas, trying to give us a little swing on the daily, has to close above $4.25 to do that. The weekly candle is red and a potential shooter, so that's tough. A close next week below 401 would turn this into a swing high, so you want to watch for that. So that's your update for this week. Looks like daily cycle low across markets, but it could be very short-lived, so make sure you have those stops in place. Thanks for watching.